Welcome to XRP Pro Ledger. Today we need to address something directly before we get into the data. Three major developments landed this week, and when assembled together with the precision they deserve, they produce one of the clearest structural pictures for XRP that this market has generated in the past 18 months. The SEC and Ripple have filed a joint settlement agreement. This moves the remaining civil enforcement actions to their final resolution stage. The legal overhang that suppressed XRP's institutional adoption for years is now in its closing chapter. Spot XRP ETFs recorded their strongest weekly inflow of 2026 at over $65 million. Cumulative inflows have crossed $1.50 billion, and 769 million XRP is now in institutional custody across 7 US products. On-chain data confirms that whale addresses holding 1 million XRP or more accumulated an additional 360 million XRP in the last 7 days alone. This brings the combined ETF and whale supply compression to over 1.1 billion XRP removed from liquid circulation in a single month. The XRP is currently trading at $1.42 to $1.43. It is consolidating after an 8 to 10% April rally that briefly broke $1.50. The first confirmed bullish MACD crossover of 2026 on the daily charts is now pointing toward a $1.70 to $1.90 technical target. Stay with this analysis through to the end, because I am going to walk through Ripple's quantum-ready roadmap in detail, and the institutional implications of that roadmap are more significant than most of the commentary has captured. The SEC and Ripple joint settlement filing is a massive legal milestone. It transforms XRP's regulatory status from resolved to operationally cleared. The distinction between those two conditions matters enormously. It matters for the institutional deployment pipeline that has been building behind it. The lawsuit's resolution in late 2025 established XRP's legal status as a digital commodity. The joint settlement filing, now moving through the court system, is designed to officially dissolve the remaining injunctions on Ripple's operations. Specifically, the injunctions that limited Ripple's ability to expand its on-demand liquidity services within the United States without legal friction. When those injunctions are formally dissolved, Ripple's ODL infrastructure becomes fully operational across US domestic corridors for the first time in the company's history. The institutions have been watching and waiting for that specific operational clearance. The banks, the payment processors, and the corporate treasury operators. They need to know that the settlement layer is not operating under any residual regulatory constraint. Now, they have a documented timeline for that clearance arriving. The joint filing is not the end of a legal story. It is the starting gun for a domestic ODL deployment cycle that the legal environment has been preventing until now. The $1.50 billion in cumulative ETF inflows and the 769 million XRP in institutional custody represent a massive supply compression dynamic. This is operating independently of and simultaneously with the whale accumulation data. The combination of both mechanisms working in the same direction at the same time produces a supply-side picture that the current price level does not reflect. Let me be precise about the mechanics. ETF inflows require the ETF managers to purchase XRP from the open market. They place it in institutional custody where it is not available for secondary market trading. Every dollar that flows into a spot XRP ETF removes a proportional amount of XRP from the liquid circulating supply permanently. With $1.50 billion in cumulative inflows at an average acquisition price between $1.40 and $2, the ETFs have removed a significant portion of the liquid supply that would otherwise be available to absorb institutional buying at scale. The whale accumulation of 360 million XRP in 7 days adds another layer of supply compression from the on-chain side. Large holders are removing tokens from exchange-accessible positions and placing them in cold storage. These are not independent events. They are parallel expressions of the same institutional conviction operating through different access channels simultaneously. There is a specific number embedded in this week's data that most analysts are not isolating. I want to walk through it carefully because it changes the framing of the current price consolidation in a precise and important way. The combined figure of ETF custodied XRP and whale accumulation over the past month represents over 1.1 billion XRP removed from liquid circulation. The total circulating supply of XRP is approximately 57 billion tokens. 1.1 billion XRP represents roughly 1.9% of total circulating supply, compressed out of the liquid market in approximately 30 days. That rate of supply compression, if it continues at even half its current pace, begins to create structural scarcity conditions in the exchange order books. And this happens within a time frame measured in months rather than years. The price of XRP at $1.42 to $1.43 is the price that exists before that scarcity is visible in daily trading. The price that exists after the supply compression creates measurable order book thinning is a price that the current chart simply cannot reflect. And that gap between the current price and the structurally supported price is where the opportunity for positioned holders sits. I will address the Clarity Act's specific capital unlock mechanics and the exact institutional demand wave it will trigger later in this analysis. The confirmed bullish MACD crossover on the daily charts is the technical signal that provides the quantitative timing framework. It maps perfectly to the supply compression and institutional demand story. Understanding it requires treating it not as a standalone chart pattern, but as a technical confirmation of an underlying fundamental shift. The MACD crossover on XRP's daily chart is the first clean signal of this kind since January 2026. Technical analysts specifically focus on MACD crossovers after extended periods of bearish signal line positioning, because they represent a confirmed momentum shift in the underlying price structure, not a temporary wick or an intraday spike, but a sustained directional change that has materialized over multiple sessions. The current crossover has XRP testing $1.45 resistance. Historical April performance data for XRP shows average returns of 24% in April, a seasonal pattern that has materialized in multiple previous years. If it follows its historical trajectory from the current $1.42 base, it points toward a $1.70 to $1.90 target range by month's end. The $1.90 level specifically is where technical analysts are focused for the April monthly close, because a confirmed close at $1.90 would open the technical path to $2.90 on the weekly charts, and it would represent the first piece of evidence that XRP's price discovery phase has formally begun. Now, I want to walk through Ripple's quantum-ready roadmap in the detail it deserves, because the institutional implications of this announcement are being significantly underweighted. And that underweighting is creating an analytical blind spot that institutional technology evaluators are not making. Ripple has officially announced a 4-phase roadmap to make the XRP ledger fully quantum resistant by 2028, becoming the first major blockchain with a firm publicly documented deadline for post-quantum cryptographic implementation. The specific detail that elevates this beyond a standard future-proofing announcement is the Phase 2 status. It is already live in early 2026, testing NIST-recommended quantum-safe algorithms in collaboration with Project 11, the specialized quantum computing research organization, whose primary work involves precisely measuring the timeline at which quantum computing hardware will reach cryptographically relevant capability. Phase 3 is scheduled for the second half of 2026, involving DevNet testing with parallel operation of old and new cryptographic standards simultaneously. The full transition targeting 2028 includes emergency migration tools, a specific feature that indicates Ripple's technical team is engineering this transition to accommodate institutions that have not completed their own key infrastructure upgrades by the target date. This is not theoretical future-proofing, it is an active, phased, institutionally calibrated security upgrade, an upgrade that Bitcoin and Ethereum cannot currently match with a comparable specificity of timeline and execution. The quantum computing threat to existing blockchain security is a risk that most retail investors treat as a distant future concern, but institutional technology teams evaluating decade-long infrastructure commitments are treating it as an 18 to 36-month operational planning requirement. The distinction matters. Institutions making infrastructure decisions that will govern their operations in 2030, 2032, and 2035 need to know that the cryptographic foundations will remain secure throughout that deployment window. Bitcoin's elliptic curve cryptography is theoretically vulnerable to a sufficiently powerful quantum computer running Shor's algorithm, a vulnerability that the theoretical physics community has documented in detail, and the timeline question for quantum hardware development is actively narrowing. Ethereum faces the same fundamental vulnerability with no equivalent publicly committed post-quantum implementation timeline. Ripple's collaboration with Project 11 is the signal that Ripple is not guessing at the timeline, they are working with the entities who have the most accurate data on it. The XRPL's native key rotation feature, which allows users to upgrade to quantum-resistant keys without changing their accounts, is the specific institutional-grade accommodation that makes the upgrade operationally feasible at scale. It is a feature that competing blockchain networks will not be able to replicate quickly because it requires deep protocol-level integration rather than surface-level cryptographic updates. But stay locked in, because in a moment I will reveal how the upcoming Clarity Act timeline aligns perfectly with this institutional security upgrade to trigger a massive capital unlock. The Clarity Act's progression toward a May markup timeline is the legislative catalyst that sits on top of all these developments, and its specific interaction with XRP's existing regulatory status creates an asymmetric advantage that the market is not currently pricing correctly. The Digital Asset Market Clarity Act would permanently codify XRP's status as a digital commodity at the legislative level, adding congressional confirmation to the judicial confirmation already established by the SEC lawsuit resolution. The capital unlock that would follow that legislative confirmation is specific and large. Analysts are projecting $4 billion to $10 billion in additional institutional inflows into XRP products following the Clarity Act passage. This is driven by the category of institutional allocators whose investment mandates require legislative rather than judicial regulatory clarity before authorizing full deployment. These are the pension funds, the sovereign wealth funds, and the endowments. They have been watching the ETF inflows accumulate, watching the whale accumulation data print, and watching the quantum roadmap announcement, but their internal compliance frameworks will not authorize deployment until the legislative green light exists. The May markup timeline, if it holds, means that legislative green light arrives during the exact same window as the MACD crossover technical setup. That is the convergence that the institutional analysts who are already positioned are waiting for. The market cap context of XRP having flipped BNB to become the fourth largest cryptocurrency at approximately $91 billion provides a crucial ranking threshold. It activates a specific and significant category of institutional mandate eligibility. Institutional investment policies at major asset managers, pension funds, and index tracking funds typically include minimum market cap thresholds for digital asset allocations, thresholds that exist because below a certain size, an asset lacks the liquidity for institutional scale position building without generating adverse price impact. The fourth place ranking at $91 billion places XRP above the market cap minimums in virtually every institutional investment policy that includes digital asset allocation criteria. This means the universe of institutions that are now technically permitted to allocate to XRP has expanded significantly with the BNB flip. The institutions at the margin of that threshold who were reviewing XRP but could not commit are now in a position to begin their formal allocation process. The ETF inflows confirm this process is already underway. The whale accumulation data suggests the on-chain side of the same dynamic. The joint SEC settlement moves the legal constraint out of the picture, and the quantum roadmap addresses the long-term security question that institutional technology teams were specifically flagging as a prerequisite for a decade-long infrastructure commitment. The supply compression arithmetic, assembled precisely from the data available this week, produces a specific and measurable picture. It shows exactly where XRP's available liquid supply is heading relative to the institutional demand that is building. 7 US spot ETFs hold 769 million XRP in institutional custody. Whale addresses accumulated 360 million XRP in 7 days. The combined figure represents over 1.1 billion XRP removed from liquid circulation in the near term. The Clarity Act passage would trigger an estimated $4 billion to $10 billion in additional institutional inflows. Capital that would need to acquire XRP from a market where the liquid supply has already been compressed by 1.1 billion tokens. The SEC joint settlement dissolving ODL operational constraints would open US domestic corridors to on-demand liquidity usage at scale, creating recurring transactional demand for XRP that is independent of investment demand. The quantum roadmap removes the long-term security objection from institutional technology evaluations, and the bullish MACD crossover provides the technical timing signal that quantitative trading models use as their trigger. Every one of these inputs is pointing in the same direction simultaneously. The price at $1.42 reflects none of their combined significance. The price that emerges when that combined significance is fully reflected in the market is the price that position holders are waiting for. And the data this week suggests the timeline for that reflection is measured in weeks, not months. The complete structural picture that this week's data produces is one that deserves to be stated plainly and precisely, without the emotional amplification that most crypto commentary applies to it. The SEC joint settlement is in its final resolution stage, removing the last legal friction from Ripple's US operational expansion. ETF inflows at $65 million in a single week, with $1.50 billion cumulative confirmed institutional demand is not slowing, it is accelerating. Whale accumulation of 360 million XRP in 7 days confirms on-chain institutional conviction at the highest levels. The quantum-ready roadmap with Phase 2 already live positions XRPL as the only major blockchain with a firm, phased, institutionally calibrated post-quantum security implementation, ahead of Bitcoin and ahead of Ethereum. The bullish MACD crossover on the daily chart with $1.70 to $1.90 as the technical target provides the quantitative timing framework. And the Clarity Act, moving toward a May markup timeline, provides the legislative catalyst. A catalyst that would unlock the $4 billion to $10 billion additional institutional inflow wave that the current ETF infrastructure is already positioned to receive. This is not a speculative thesis, it is a documented, verifiable, data-supported structural assessment of where XRP sits on April 26, 2026. The gap between where it sits and where the data says it is going is the opportunity that institutional capital is already acting on, while retail sentiment remains in neutral. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.